If you're a Tesla shareholder and you're feeling the heat right now, you might be reluctant to purchase the dip and increase your investment. It's true that most investors would prefer to sell their stocks or keep their money safe in the bank rather than watch their asset values gradually decline over time. However, I'm not here to talk to you about normies. Instead, I'm here to share what the legendary Cathie Wood has to say about this topic and explain why those who heed her advice will probably make a lot of money. So settle in, relax, and hit the like and subscribe buttons. According to Cathie Wood, it makes sense that Tesla investors are nervous about the stock market in general and about Tesla stocks in particular, but that this is the perfect time to enter these markets and buy up shares. What makes this opportunity unique, she asked, gives investors and you a once-in-a-lifetime opportunity based on Tesla's average trading levels from October 3 and December 2022. Even though the price of Tesla stock had dropped by 60 since the company went public 10 years ago, Cathie Wood's investment management's ARK Invest went on a dip buying frenzy, buying $88 million worth of the stock during that time. The company has a history of buying the downturn, Wood announced in October through the flagship ARK Innovation ETF that she had purchased 66,190 shares in EV. Cathie Wood had decided to increase her investment in the company, a manager's $6.7 billion flagship investment ARK Innovation exchange-traded fund, although Wood is optimistic that Tesla's stock will rise soon. Why is Wood buying more shares at this time? We'll go into that more in the video. But if you enjoy this kind of content, don't forget to like, subscribe, and turn on notifications. Tesla is our third largest investment. Cathie Wood says that investment gurus have identified anticipated advancements in robotics as factors that could impact stock price and performance, could enhance growth in the future at AI and renewable energy sources may power Tesla vehicles. Cathie would predict that there will be significant market returns for them by 2023, when inflation will have decreased and new ideas will be contributing element. Initiatives supporting these companies' phenomenal wealth creation. Cathie claims that because of deflation, creativity will stimulate it. After the self-destruction of innovation caused by deflation, firms that are managing their stock portfolios with minimal long-term investment in the case of commodity deflation, innovative goods and services will improve. However, when inventories are deflated, innovators may find it difficult to meet the new market challenge, and automakers with this. It is not the first time that investors have been led to believe that deflation in 2021 poses a greater risk to the economy and financial markets than inflation did, because stock investors were convinced Cathie Wood's concerns about deflations in 2021, that since Tesla is committed to innovation, manufacturers shouldn't have any trouble with this. Cathie Wood further states that only businesses with a competitive advantage in terms of innovation will be able to weather the expected deflation, provide a substantial impact on the price of Tesla shares in the future. The market is bracing for the potential of a rate cut from the Fed soon. The stock market and the economy are both suffering from historically high interest rates that will probably stay that way, increasing to heights we haven't seen in recent memory. Elon Musk, the company's creator and CEO, has already expressed his opinion that the company's stock price is declining because of the recent rate increases. Investors' increased anxiety about the future has led to a decline in the value of stocks. Fortunately, investments are showing signs of decreasing inflation, which suggests the financial markets are pricing in another round of rate hyperregulators, this time at a rate of roughly 0.5 percentage points or 50 basis points, which may position them to delay rate hikes for the time being. Federal Reserve Governor Christopher Waller has stated that he is now comfortable enough with the status of the economy to back a plan that would raise interest rates by just 50 basis points. There is less concern now that the Federal Reserve has acknowledged that inflation is lower. The vice chair of the Federal Reserve Board, Larry Brainerd, expressed optimism recently, suggesting that the Fed would immediately halt raising interest rates in response to recent inflation data that reflect a slower rate of price increases in the U.S. Regarding Tesla's capacity to develop its energy and AI robotaxi enterprises, Cathie Wood has given the company positive feedback. He claims that the energy sector was the only one to grow in 2022, rising by about 50 to our big fortune. According to the company's data, Tesla is now seeing an exceptional increase in this industry. The Tesla Energy division had significant growth during the third quarter of 2022, which led to record sales and installs of energy storage. Although Cathie Wood predicts that rising inflation will eventually destroy most of the industry's competitors, she also predicts that most people will choose electric vehicles, leading to a dramatic drop in oil usage very, very shortly. Of course, she cannot see into the future. The total energy sales of 8 Teslas increased by 38.6% year over year to $1.117 billion. The EV market is expected to grow from $287.36 billion in 2021 to $1,318.2 billion in 2028 after a dip in sales around the year 2020 due to the pandemic. The years 2022 to 2024 are expected to be the most promising for sales of electric vehicles. This is achievable with current policies and government support, so it's not an exaggeration to say that Cathie remains unshaken in her conviction about Tesla in an interview last week with Yahoo Finance. As for the EV industry, she believes many events point to the direction in which the future of EVs will go in that direction. The CEO and creator of ARK stated that she has no concerns about Musk's direction at Tesla. Tesla suffered yet another setback earlier this week when Goldman Sachs reduced its pricing. Target also reduced projections for the fourth quarter's tested deliveries and gross margins, indicating the possibility of declining demand. Although he pointed to loosening supply chains that put Tesla at the forefront of being able to drive down costs and prices to help bring electric vehicles to the mass market. Goldman maintained its buy reading and is bullish over the long term. Wood told Yahoo Finance that Elon Musk's primary responsibility at Tesla right now is moving the company towards an autonomous taxi platform. It should be noted that Tesla has previously split its shares on August 31, 2020, and on that occasion, it announced a 5-for-1 split, which caused the stock price to rise in a comparable range. Investors responded favorably to Amazon's recent 20-for-1 stock split. This does not guarantee that Tesla's stock price will rise after the split. As we all know, it hasn't, but it may give us an idea of what might occur 2 or 3 years from now. If you want to avoid having your entire investment portfolio destroyed, which I think will happen in 2024, he seems to be as focused as ever on the fact that Cathie is an avid stock market follower and that her company ARK Invest has made millions of dollars back to its investors. I believe that he believes it will happen next year. According to reports, Cathie projected that by 2026, shares will be worth $4,600, and that by 2025, the price of Tesla's stock would approach $3,000. Cathie, although I believe this year has been terrible for the stock market, she believes that the best time to invest is when stocks are cheap during a bear market. Market territory. Do you support Cathie Wood's move to raise her stake? Let us know in the box provided below. Then, watch the video to learn about Tesla's most current initiatives. Thank you, and remember to hit the like and subscribe buttons. I'll see you in the future video.